We've been, I guess, attending these conferences for a while now with our last company, which was Integra Gold, which we sold to Eldorado a little over a year ago for just under $600 million. And then we started presenting our new project, which we've had coming up on 1 year and about a month from now. So we were able to acquire this asset, a past-producing asset from Kinross a year ago. And it's been a busy, definitely been a busy year for us. Cautionary statement there. So if you kind of look at what we've been able to accomplish in this past 11 months here, acquiring the asset and immediately being able to come out with a resource, an inferred resource of 3.5 million ounces of gold equivalent, sort of underpinning the value of the company right out of the gate. We're just coming up on completing 20,000 meters of drilling, probably in the next week or so here. And we've also run quite a bit of IP work and a lot of geophysics. We've discovered extensions outside of the known resource boundaries. We've doubled the land package by aggressively staking there to increase our opportunity to go after more high-grade targets. We've got some of those that we expect results on coming up shortly, such as Henrietta, which you'll probably see in the next week or two. And we've also begun metallurgical studies. So we're on a fairly quick timeline here as we're aggressively starting to move the project forward. It's the same team, same senior management team, and pretty much the exact same team that's in place from the success we had with our Integra Gold project, which was located in Quebec. George Salamis, the president, CEO, Steve DeJong, chairman. Where we've really kind of strengthened the team this time around is through the board. David Arum, co-founder of Sandstorm, Randall Oliphant, former CEO of Barrick, Max Baker, who's the gentleman that was actually hired by Kinross before we were working with him to put a sales document together to put this up for a bidding process last summer. So he used to work with George Salamis about 10 years ago on a different project, so we contacted George, told us about this project that was going to be coming up available for bid last summer, and said we should probably start looking at that as we were kind of, as the market said, on the chopping block with our last project, which ended up happening in the spring last year. So he's a specialist in low sulfidation epithermal style deposits and was obviously very familiar with it, having done a study for them to put it up for a sales document and sell the asset last year. And then Timo Jaristo used to be with Goldcorp and spent a number of years with Placer Dome as well. So with the team that you see here and with the strengthened board, we've got a proven track record of being able to aggressively advance projects with the drill bit, capital markets, and marketing. So we do all three phases pretty hard. And as you can see on the next slide, a bit of a recap of what we were able to do with our last project, which we took basically from a $20 million market cap and eventually sold it for just under $600 million, with a lot of the heavy lifting done during one of the worst bear markets on record. So again, with this team, you do get a team that can operate an advanced project, whether it's a good market, neutral, or a bad market as well. So capitalization ownership structure, as I'm often on the road presenting this in Canada and the US, as I was with our last project, this is one of my favorite slides. Unfortunately, we had to raise a lot of capital last time, between 20 and 35 cents. So by the time it was all said and done, we ended up at about 500 million shares by the time we were bought by Eldorado. So this time around, we're keeping the share structure a lot tighter. We have 56 million shares issued and outstanding. And as you can see, there's no warrant overhang. We were able to raise 27 million as at 85 cents as our IPO last year in October with no warrants. It was definitely not an easy raise to do, but we were able to do that and keep the share structure intact, so there's no overhang of warrants there. We have 5.5 million in cash, which gets us through into probably January or February. So we're cashed up for the moment, and that obviously allows us to finish our work program as well, which we'll see in a few minutes. When you look at a little bit of a breakdown of the ownership structure, our team ourselves have put in well over 1.5 million into this project, so we have about 14%. And then Kinross has 9.9% through the acquisition. And then you've got people like Pierre Lassonde, Ross Beatty, Eric Sprott that are shareholders as well, and then institutionally, Hadron, Mason Hill, Arbim, Osisko Mining, Osisko Royalty, Curvature, Extract, AGF. So a nice diverse group of gold investors that are in the stock as well. As far as jurisdiction goes, I mean, when you look back at some of the key things that made us successful last time around, we had high grade, we had proof of production from majors on the asset, so we already knew it worked in the past, geopolitically secure area, and good infrastructure. So those were some sort of key things that we were looking for our new project, and we've been able to find that. Fraser Institute ranks Idaho as about the 4th best spot to be exploring or advancing or developing projects in the US. There's great infrastructure there at the project as well. We have the power grid, we have all the old shops and buildings and equipment and things like that, and water treatment facility when this project was last running up until the late 90s, as you'll see in a few minutes here. So we're very happy to be operating in this jurisdiction. So 2 different periods of production associated with the Delamar and Florida Mountain project. You go back to the old days, late 1800s to about 1910, you had some families that were underground mining, some extremely high-grade gold and silver, averaging 30 grams per ton gold, and even higher at Florida Mountain, using a 15 gram per ton cutoff. So, like I say, some pretty gaudy numbers as far as the gold back in the old days with sort of primitive mining methods. And then you fast forward more recently up to 77 to 98, where there was first Earth Resources, and they were bought by NERCO, and then NERCO was bought by Kinross, and they were the last ones to run it for about the last 10 years. And the only reason that they shut down was due to low gold prices in the mid and late 90s. And in Idaho, you have about 4 or 5 years in which you either restart a mine or go into environmental reclamation, so that's what they did. And then they just made the project available for a bidding process last summer, which we were able to win out the bid on that. So it was running 3,000 to 4,000 ton per day towards the end there, and you can see the mill grades there. So 2 distinctly different periods. That was the low grade portion was the most recently, and then the high grade was quite a while back. So when you look at the resource we were able to come out with, we've kind of broken that down into 2 different categories. One's a 0.3 cutoff, which would be a heap leaching cutoff. We've started our metallurgy, and I'll talk to that in just a moment. But that gives us about 3.5 million ounces of gold equivalent at an average grade of about 0.7 grams. If you want to bump that up to more of a milling cutoff, as Kinross was doing, it's 0.75, and then that drops the resource down to just under 2 million ounces of gold equivalent in the inferred category. So speaking of the, the metallurgy slide's not there. So when you look at Delamar here, what you see there in the blue is you see the resource that we have there, the 2.7 million ounces, and then you see that dashed white line where it says limit of past mining. So we've started with our first 3 sets of drill results, as you can see them listed on the side there. So that first fence, we were able to return some grades that were definitely much higher than the 0.7 gram average for the resource, over some good wide intercepts as well. And then we stepped out another 100 meters to the second fence there, and that's where we started to hit some really good grade there over some nice thick distances. As you can see, 2 grams over 220 meters. Inside of that, we had 4 grams over 73 meters as well. And then about a week ago, we put out another set of results, the third from Sullivan Gulch, and that returned some strong results as well. When you look at those step outs, as long as we continue to have these types of grades and thicknesses, you know, the ounces are adding up fairly quickly with the drilling that we're doing thus far at Delamar. So this is a slide. So Florida Mountain was almost like a satellite deposit for Kinross. They had all the infrastructure set up on the top of Delamar, and then 5 miles away you have Florida Mountain. So there's an all-season road that connects the two, and they were basically trucking the ore over from Florida Mountain when they were operating the open pit situation there. So we've had our first set of results come out on this deposit, and those were just released this week. So we were able to hit again some high grade as well as some low grade, similar to what you saw at Delamar 5 miles away. So basically what we've taken from the early drilling so far is that we're in a situation where we've been able to confirm the model that we have, which is very positive as well. We still need more drilling at Florida Mountain, as the lion's share has been done over at Delamar thus far. As you can see there, Florida Mountain, some of the holes that Kinross hit just underneath of the open pit, nothing to sneeze at there, some really good grades. We know the high grade is there. It's just a question of drilling a bit more and trying to get a better understanding of how that hangs together. And this is a recap of the exploration budget that we're just wrapping up. So 20,000 meters of drilling. The assay labs in Nevada have been very busy, so it's been slow getting results back. So we are anticipating quite a few more results to come out in the coming weeks here. The metallurgical testing that started up, that was just recently, about a month ago. We'll start getting preliminary results from that coming up to test the heap leach compatibility. They tested that back in the early 90s, where they were able to get, with a 2-inch crush, about 60 to 65% recovery on the silver, and then about 84–85% on the gold. So we'll continue with geophysics and IP surveys on that, and then we'll follow that up with a resource update coming up in Q1. And then that's going to lead us into a PEA study. So when you kind of look back, that PEA study will be targeted for June of next year. So from acquisition of the project to a PEA study, you're looking at about an 18 to 24 month period. So it's a very quick turnaround. I like to think we kind of knocked off the first 2 years of the 5 years at Integra Gold with being able to step in with a large resource thus far. So I'm getting the signal here that I'm going to have to wrap it up. So it's a proven team. We've got a lot of opportunity to grow this resource, and it is already growing when you look at the drill results that we've had so far. So lots of catalysts up and coming again that will be in the next 2 to 4 months here, and then following that up with our first economic study next year. And we're actually fairly cheap right now if you compare us to a lot of our peers, which are either advanced or development stage. And this project is moving into development as we get into next year with that PEA study. So that pretty much wraps up the presentation. Thank you.